Turn my phone off.
I can't hear you. I can't see you.
Good day, everyone. It is Tuesday, February 28th, and we are live again. Today we have Jackie Newkirk from State Farm Insurance joining us. Let's see, we've got uh kind of got double signed in here. Let me see if we can get one of these off the area here. Let's see. But at any rate, yes, we are live today with Jackie Newkirk. So Jackie's State Farm agent. I have known her for several years. I'm a former claims representative with State Farm, so have been around insurance for quite some time as well. So again, today what we want to do is kind of cover some insurance basics as well as some advanced strategies as well. So we'll discuss everything from your auto health, auto homeowners renters, basic coverages. We'll discuss limits. Jackie will share with us things that contribute to the cost of your insurance so you can better prepare for things that you can do to limit those costs. And we'll get into the differences in life insurance. There are several types of life insurances, and we have these questions quite a bit on how to manage those. So as Jackie gets set, we will bring her on here in just a second.
Hi, Marcus. Can you hear
Yes,
me?
we can hear you. Hello.
Awesome. Awesome. Hi.
How are you
Great.
today?
I'm wonderful. I'm at home now, in my home office.
Good,
So
good,
good to
good,
be
good.
with you. Good to be with you today.
How was
Um,
traffic? You made it home? No accidents?
I got across 40 and 540 without incident, which is a miracle. So
Well,
this
you
is a good place to start our discussion, particularly around auto insurance.
Yeah, us as us former claim reps, and I think you spent some time as a claim rep as well.
Yeah, a
Um,
little bit.
when it would rain, we would kind of call out sick because we knew the next day was going to be a lot of car accidents around here. So,
Absolutely, absolutely.
I don't
And
think things have changed. People still don't know how to drive.
now that we're out of COVID,
Uh-huh.
uh, people are back at work and out on the roads. The traffic, the distractions of drivers are greater than ever.
Mm-hmm.
So, what's really important to me and what I do in my agency is I'm a risk manager. What I
Yes.
help people do is manage the risk of their everyday life, recover from the unexpected, and realize their dreams. That's what it's all about. And they can lose sight of their dreams a lot of different ways. And we'll start off first about car insurance. Um, it's kind of that mandated, legislated thing that everybody thinks they're overcharged for and they don't understand. So, but you got to have it if you're going to be on the road. And the main coverage that you have to have is your liability coverage. You must have that to be on the road. You do not have to have coverage for your 2010 Lexus. If it's paid for, you don't have to insure it for replacing the vehicle, but you do have to insure what you may cause, the damages you cause to other people, bodily injuries. And in North Carolina, unfortunately, we have a liability limit that's so low, $30,000 per person for liability per person. Per accident is only 60,000 per person and 25,000 for property damage. So when you think about those limits, they're very low with the litigious society we're in now. People, or you have a small accident and that may turn into thousands of dollars. So my job is at first to start off with liability limits that protect your assets. Now, everybody doesn't have the same assets, Marcus. You might have a little bit more than other people, you know, and you need to protect differently.
Absolutely. I mean, you make a good point because unfortunately, an accident is an accident. We all
Hmm.
understand, but we don't get to pick and choose whom we hit.
That's right.
Um, and so that's the more important thing. So, like I said, to share with everyone a quick story. As a former claim rep, had an accident with a young driver. Her parents were really successful, owned a lot of property. Um, she pulls out in front of this car. It's her fault. And unfortunately, the driver was a physician, medical student at Duke, and his
Mhm.
girlfriend was in the car who was a registered nurse. She ends up hitting her head, um, ends up in a halo, misses 2 years of work. So we know what those damages look like. So
Yes.
as you just explained, $60,000 is not going to cover that.
Mm-mm. Mm-mm.
So, give us a good understanding. Like I said, so we've got our liability limits, and now we're
Hmm.
pricing things out here. Going, yeah, the average Honda Accord now is, I guess, I don't know, $35,000. I don't know what it costs.
Could be. Could
Um,
be.
but your basic car is $35,000. Injuries are another thing to pay attention to.
That's right.
Um, so it adds up really quickly. So there's a couple levels I think that you can share with us in terms of one, we're talking about those limits that we have to get to. Two, there are also, I believe, some minimum limits we need coverage wise once we start to talk about umbrella policies and covering
Sure.
more things. So if you can kind of
Absolutely.
share that piece with us, like, hey, on your car you need this, on your home you need this in order to fully protect, and we will get into umbrella coverages and how that plays out as well.
Absolutely. And if you're calling around for auto insurance and you're trying to get rates, you know, you're going to get cheaper rates with lower liability limits. And if you have assets to protect, because it's all about asset protection, State Farm has pretty deep pockets. I'd rather them pay my claim and the liability claim than it come out of my household and my savings. Um, so 30,000 is the minimal limit on an auto policy. And that's for liability. That's everything from medical bills to lost wages, pain and suffering. All of those things you see the attorneys talk about on the different commercials. The next limit, you maybe go up to 50,000 per person. And then you go to 100,000. 250,000 per person is the liability limit that's required per person to have a personal liability umbrella that's going to give you protection over your home, your auto, your toys, your RV, your motorcycle, all of those things. So you can see it goes from 30,000, Marcus, to up to 250,000. And you can go over that amount. You can get 1 million if you'd like. It depends on, what kind of assets you have to protect. So when you're looking for insurance and you're asking for a quote, don't necessarily look for the cheapest. Look what's best for you. If you live in a $500,000, $600,000 house, you drive a new vehicle, you have money in the bank, that you should be carrying the same liability limits that a college student would take $30,000, the minimum limits, because they don't have anything. What are you going to do? My dad used to say, you can't get blood from a turnip, but you
That's right.
can. Even in those cases, you can have judgments placed against you as a college student and a young person for damages you caused, years before.
Hmm.
So don't look for just the cheapest. Ask them to explain what the liability limits mean. They should ask you what you do, what you enjoy, who's riding in your car. I can't make a recommendation to someone about their auto insurance until I know more about them, and what they have to protect. But minimal limits for me is, um, if they come to me with minimal limits, I'm going to at least talk them up until the next liability limit, which is 50,000 per person. because my job is to try to protect their assets as much as possible. And I know people call around for quotes all the time, and oh, my rate may be higher simply because I have a higher liability limit. But those are so important. It's what protects your assets. You got to have it. Sometimes it can only make a difference of $10 a month if you take a higher limit. So I just encourage everyone to take a look at your liability limits. You see those three little numbers that are here, the 30, 60, 25, 50, 100, 50. These are indicating the amount that the insurance is contractually obligated to pay on your behalf.
Mm-hmm.
After that, after they pay their 30, their 50, or even their $250,000, that's it. It's a contract. We fulfilled it. Anything after that, they can come after you personally. So auto insurance is a very important. People don't think a lot about it. You're on the road. You got to have it, but it does a lot. And in my 8 years in claims and 35 years in the business, come June, I've seen everything from fatalities and just terrible accidents and not enough coverage sometimes. And the client is really, now they're looking, what am I going to do? And it's just so important to look at your liability limits and don't take that for granted and just go with the cheapest amount.
Now, you mentioned the cost of insurance, especially on the auto side. Now, we're pretty well aware of, we understand if we have accidents, it
Tickets
goes
and
up, and
accidents.
if we have tickets or what have you. But what are some of the soft things that also are impacting that rate that you pay?
Well, credit may not be so soft, but it's one of it's a major risk factor.
Right.
And I know for a lot of times it was, it seems like it was considered redlining per se, charging higher for your credit, but it is a risk factor, and it is a major element that's used in rating your policies in every state except California. So I can just about tell when I look at someone's rates that it is higher because no tickets or accidents. It's a credit issue. And I'll ask them, have you made a large purchase lately? Or sometimes I'll ask them, what's your credit score? Not that I see that in their rating, but I know that rate is higher. So rate is tied to your credit. And we may not like it. We can't fight it. It's approved in North Carolina, and companies will use it. Tickets and accidents, of course. And if you get a chance to get out of a ticket, I suggest that you do. If you can appear in court and, get a prayer for judgment, just don't pay a ticket just because. Try to do something to lower that charge, because whatever you get, whatever surcharge you get, or points, as we say, it's going to follow you for 3 years. If you have a suspension, it's going to be 5 years. If you have a DWI, it can go on and on and on, or DUI, it can go on and on. So those are things that we control. How we operate our car and paying our bills on time. Sometimes it's just a matter of that, that can affect your rate. Even where you live, where your car is garaged. Someone moves from 27610 to 27613 in Raleigh. Unfortunately, that's going to be a rate change, because it's not just you and how you drive, it's where your car is garaged. Is your car more likely to get vandalized or stolen if it's in one zip code over the other? Doesn't quite seem fair, right? But it's a reality.
Right. It's a numbers driven business, and those what are our underwriters, they just are doing the math game.
Right. And all of those things are there for them. We have enough data that we look at the trends, and it's built in. So if you know the game, you know how to play it. And credit is that factor. How the car is driven. Is it pleasure? A lot of people are working at home now. If you're
Right.
working at home now, for me, that's a pleasure rate. That's the same rate as someone who is retired. You
Mm-hmm.
usually don't go out very much when you're working from home. So ask how your vehicle is being rated for usage. That's why they ask you, do you drive more than, how far do you drive one way to work?
Mm-hmm. Mm-hmm.
It may
Right.
be 8 miles, it may be 30 miles. People
Right.
who live in Johnson County and work downtown Raleigh, their rate's going to be different because of how they use their car.
Mm-hmm.
Some
Mm-hmm.
things you cannot control, but some things you very much can control.
Mm-hmm.
And the credit piece is one of them, and how you operate your vehicle. And just take advantage of discounts. Bundle your home and auto together. If you're not doing that, you're missing a substantial saving. Every company is going to give a huge discount to have your home and your auto together. Some companies won't even take your auto without your home, or your
Mm-hmm.
home without your auto.
Mm-hmm.
We
Mm-hmm.
don't do that at State Farm. We will take it all, but some companies are that strict about it.
Mm.
Um, and bundling your home and auto is so important. It gives you huge savings by doing that. And Marcus, I saw you popped up the screen for the triangle of protection.
Yes, let's go to
And
that. So that was kind of, I wanted to get to that, leading into that philosophy
mhm,
that you talked about, that triangle of protection. We kind of started with the auto. I think you wanted to pivot and kind of also talk about the homeowner's umbrella,
mhm,
mention that, and,
mhm,
and then the disability and life insurance. So yeah, so
right.
this is what you shared with me is your philosophy in terms of,
Hmm.
and one thing I want to make sure people understand is a lot of people buy insurance, they really don't know what they're buying.
They
And like
don't.
you've already mentioned, it's risk management,
Hmm.
and we're trying to avoid large losses. So we generally don't insure the computer screen we buy because it's only $120. That's not a large loss if something goes wrong with that.
Hmm.
But the car is a large loss. Hitting somebody is a large loss. Fire to a home is a large loss. A hailstorm is a large loss. So again, learning how to, and we'll really get into that when we start to talk about life insurance. We had this discussion the other day. Um, and this is how kind of, again, I wanted to share with all of you all a lot of the professionals that we work with to make things happen for you all. And so we lean on each other all the time and talk
Hmm.
about these scenarios and cases and how to best use you all's monies to your advantage. That's our job, is to
Absolutely.
leverage your research, your resources the best we can.
That's
That's what
right.
we're here to do. So we're thinking through scenarios and how do we combine things to make it work for you. Um,
And
but to
that's why
pivot,
that bundling is so important.
right, right. So
Hmm.
to right, because if you bundle now, you just freed up some other cash that maybe
Oh,
can go towards a term policy, maybe it goes towards a
absolutely.
disability policy,
Absolutely.
whatever. But take it from there, Jackie.
Absolutely.
What's next? Homeowners and
Okay.
umbrella. Where you want to go?
Right. Let's look at the homeowners, because that's part of the property. And
Okay.
home, a lot of people think, you ask them what their greatest asset is, and they of course will say, my home.
Mm-hmm.
My home is my greatest asset. We'll digress on that, but the home is very important. You got a monthly bill if you don't own it yet, and you're going to continue to pay that sometime for 30 years. So when you're talking about the triangle protection, once we look at the home, we look at, how do I stay in my home? Or how would I lose my home that we worked so hard for, we poured into? We
Mm-hmm.
could lose it, that it may burn to the ground.
Mm-hmm.
And a homeowner's policy, we know, everybody knows that's the named peril under their homeowner's policy, is fire. But fire, water, um, lightning, windstorm, hail, tornadoes, hurricanes.
Mm-hmm.
Here in the city of Raleigh, we don't have a hurricane deductible. If a hurricane comes, it's the same deductible you would pay for your hot water heater that burst. So it is, the homeowner's policy is so rich. It's not just the dwelling itself,
Mm-hmm.
it is also the liability that comes with the policy.
Mm-hmm.
It's also um, all of your contents.
Mm-hmm.
And that's about 70% usually your dwelling amount. All of the contents. You take your house and you turn it upside down, everything that falls out, thus everything that you own, all of that's insured as well. And think
Mm-hmm.
if that house burns down, all of that has to be replaced. And I get it all the time. Well, how am I going to know? How are you going to know what I have?
Mm-hmm.
Unfortunately or fortunately, you're going to tell us what you had. And
Right.
so I suggest to clients all the time, take your phone, take your video camera, um, go through your house, just scan every room, all of women with, your designer bags and your shoes and your jewelry and all of those that silver frame that was given to you as a wedding gift. You're not going to remember that when there
Right.
is a catastrophic loss. You're not going to
Mm-hmm.
remember it. And
Mm-hmm.
we're going to ask you as an insurance company, we don't know what you have. We just insured your contents for say $300,000, 250, whatever that amount is. But
Mm-hmm.
you got to tell us what you had in order for us to pay you.
Mm-hmm.
So take the time and your cell phone, anything, and download it and document what's in your house so it can at least trigger. Because when it's all in rubble and you see all around the country now, everything that's happening from wildfires to
Mm.
snow and ice and,
Mm.
mudslides, you never know
Right.
what's going to
Right.
happen, what kind of loss is going to happen. Our job is to make you whole, to put you back in your house, fill it with the things that you had, but you're going to have a part in that. Homeowners insurance is very important. If you don't own your home, you've got to have it. Even if you own your home, seems like you better have it because that's a
Mm-hmm.
huge investment. So when it comes to the home, I will say this because right now with roofs are a big deal. We've had a
Mm.
lot of weather in this area. I get a
Mm-hmm.
call, several calls, every week about roofs. And you have to play your part in that. If your roof is 25 years old, some people will choose to go ahead and replace their roof. Some people wait till that next storm comes along and damage it so severely that maybe the insurance company will pay for it. But I
Mm-hmm.
want people to realize that um, it is your job to maintain your house. The
Mm-hmm.
better you maintain it, the better your costs for insurance. Because just like auto insurance, if you have frivolous losses like you leave your bathtub running and you forget about it and you go to the neighbors and you stay over there for an hour and your water's running down your staircase. Um, that's a loss that it's a claim record rating type loss. It's something,
Mm.
I kind of say it's like a silly claim. You did something, it wasn't like there was a short in a wire at your house
Right.
and
A
could not
natural. Right.
prevent it, unnatural, and it caught on fire.
Mm-hmm.
Or a windstorm came around and blew your roof off. You can't help that. That's catastrophic. But some of the small things in the summer, we get a lot of kids. Now we got air fryers, thank goodness, but it used to be a lot of frying of French fries in the summer when
Mm-hmm.
kids are home. They will start little fires, kitchen
Mm.
fires. So
Wow.
being aware and having that conversation with your family because you want to avoid the losses, it keeps your costs down. And it's a hassle to have a claim. I don't know if anybody's
Yeah.
ever had to move out of their house while they redid your wood floors because your refrigerator ice maker leaked. I have,
Mm-hmm.
$18,000 later when they've got to do all the hardwood floors and you move out for a week. So it's a
Mm.
hassle, it's an inconvenience, but that's what the insurance is for. That's a big
Mm-hmm.
loss.
Mm-hmm.
If you
Mm-hmm.
have something small, you see a water stain on your ceiling in your um, living room or your dining room, research it. Don't just ignore it or paint over it. It came from
Yeah. Something
someplace.
happened. Right.
And
Exactly.
don't necessarily, when you see that stain, just call 1-800 State Farm or 1-800 whoever to file that claim.
Mm-hmm.
It may be under your deductible. It may be one of those small things that you want to save your insurance for the big things.
Mm-hmm.
I'm all
Absolutely.
about claims. I have a claims background. I feel like that's one of the reasons I exist as well, because nothing happens with insurance until a claim happens. You have a car accident. There's a house fire, someone dies, someone's disabled. Nothing happens till something happens.
Right. Right.
So I want to make sure I'm there when that thing happens, but I want to make sure I'm that advisor as well, because with global warming and all of this climate change that we're seeing, it's a different deal with insurance now. I mean, there's claims happening all over the country all the time. We may be fine, but there's a wildfire burning in California. There's a snowstorm that's blizzards or somewhere in Buffalo that's got
Right.
people buried about alive.
Mm-hmm.
So the cost, insurance companies are going to be very, they're going to scrutinize claims. You know, you have 2, 3 a year, you may not get coverage anymore, not with that
Correct.
company. So save it for the big things. And you have a question, call your agent. They'll talk to you about it and look at your record and make it and advise, and maybe even give you the name of a contractor, someone who can do the job for you that's even less than your deductible. That's just another way, Marcus, to control the cost. A lot of people just pick up. It's so easy to
Right.
pick up
Right.
and call a claim. I even had one this week where one of the roofers, the insurer didn't even know, had filed a claim on his behalf. Not until State Farm contacted him. But I said, you must have signed a contract or did something with them. And he says, yeah, we talked for several, hours, which is what they'll do. They'll wear you down. But he should file the claim. That shouldn't be filed. And he didn't want to file it. But it was filed. So we were able to walk that back. So being careful about when the roofers come to your neighborhood, which they will, when they storm. You don't have anybody who comes to you knocking on your door. I would be skeptical of, because good contractors, roofing contractors, they don't have time to do that. They don't have time to go into neighborhoods and canvas, and they will do that in neighborhoods where they know the houses are 20 to 25 years old. They'll go into the neighborhood, talk to the elderly, especially, convince them that they have a claim, and they don't. Sometimes they do, but it needs to be handled by the insured, and be very careful about who you give your information to. These companies come into town when we have a storm, sign up, get you to sign up with them, give them a deposit, then they're gone. We hear about them every year when we get into the hurricane season. It's a scam. They come in and they try to make their money and they never show back up. So homeowners insurance is a must. It does so much. I'll speak a little bit about the liability piece of it that comes with the policy. That covers things. You are out on your deck. Your deck needs a little work, but you're going to have your 4th of July barbecue anyway. And you've got some friends and family over, and the deck decides on that day that it's going to give way. And you've got 20 people on it. That could be a liability claim out of your home. Because you didn't maintain your deck. It could be termites. It could be just, rotten out, and it just needed to be fixed. People who have animals. Some insurance companies will not insure a homeowner who has a pit bull, a Rottweiler, those type of animals. State Farm will do all of them, which is amazing, but we do. But we get business because some companies will not take it if you have those kind of animals in your home. Because if they get out and attack a child, the UPS guy, that's a liability claim. And, it's not always fair for the breed, because I know some very loving pit bulls, but that's just the way it is. That's a liability claim. So the homeowners, we're talking about the dwelling, the contents, liability coverage, loss of use. If you're not able to stay in that house because your roof has been blown off by a hurricane, and you can't stay there until they repair it. We're going to put you in another location until your house is able to be repaired and you can return home. So it's robust. It's a lot of things that's covered with the homeowner's policy, not to mention a lot of the endorsements for jewelry and fur, endorsements for backup of sewer and drains. I would say look at that. If you have a home that has a lot of trees in the yards and those roots are growing underground and they're sticking up a little bit,
Mm-hmm.
you could have a problem
Mm-hmm.
with it backing up and causing damage for sewage and wastewater to back up into your sinks in your home.
Mm-hmm. Mm-hmm.
And that's not covered unless it's endorsed.
Mm-hmm. Mm-hmm.
So having a review of your homeowner's policy, your auto, I would suggest to do about every 18 months. If you have teenagers, probably every year,
Mm-hmm.
because teenagers, that's a little bit different because, you know, if they haven't had 3 years of driving experience, they're inexperienced. So they're going to cost more. So you want to make sure
Mm-hmm.
you're trying to do whatever you can to control that cost.
Mm-hmm.
But for homeowners, take a moment and review it with your agent. And don't realize that you needed that endorsement or you didn't know your deductible was $7,000, which I just had. They didn't know they had a $7,000 deductible.
Mm-hmm.
And, you know, that's a lot.
Right.
So
Right.
be aware of what you have. And I know insurance is not sexy. It's only to me. I love it, 35 years in it. But it's take a moment. You'll save yourself some trouble down the road when you really do need it.
Mm-hmm.
So we're talking about the homeowners, and we want to. That's how we protect you. One reason we can keep you in your house because we have a robust policy that's going to cover the repairs, fix, replace, whatever the home. But what if you're sick and hurt and can't work? Sick and hurt and can't work, Marcus, we call that a disability in our business. Sick and hurt and can't work. And that doesn't mean that you have multiple sclerosis and you're out of work forever. I see you put the personal disability quotient up on the screen there. This is a good test for everybody to take a look at and see what are my chances of becoming disabled. The older you are, the greater your chances, of course. And I'll say this, that most people, 50% of the foreclosures are due to bankruptcies from people not able to pay their homeowners, pay their mortgage, is because they're disabled. They
Mm-hmm.
can't work. They just
Mm-hmm.
simply, they're sick and hurt and they can't work. And that could be a hairstylist who breaks her arm,
Mm-hmm.
and that's a short-term disability. She can't do her job.
Mm-hmm.
It could be illness where you are diagnosed with a cancer and you can't work. And unless you have that emergency fund or
Mm-hmm.
somebody who can pay your bills, this is how you stay in your home. That's that
Mm-hmm.
triangle. We can
Mm-hmm.
repair it. We can replace your income. That's all disability insurance is replacing a portion of your income.
Mm-hmm.
So that if you are not able to work, we will give you a check so you can pay your bills, particularly your mortgage.
Mm-hmm.
Disability, we don't, a lot of people think they have it at work, and they do. They have a
Mm-hmm.
piece of it at work.
Correct.
They're never going to give you 100% disability at work because you never come back. So you get a portion of your income.
Mm-hmm.
You get a portion. So what we do in this private sector is where that gap is from what you have at work, we can fill that gap. You need an additional $2,000 a month. Maybe that will just take care of your mortgage.
Mm-hmm.
That portion will take care of your mortgage, and the other 50% you're getting are taking care of your other bills.
Mm-hmm.
So it's designed to get you closer to that 100% because you're not going to get 100% from work, not long term. They're going to give
Mm-hmm.
you a portion, or you're going to go on Social Security. After about 3 years, if you're out long term disability, people are really
Right.
going for Social Security by that time. So
Yeah.
I really encourage single women, men, especially single moms. I ask them all the time is, if you are sick and hurt and out of work and you got this new home, just write the name down of the person who's going to be able to pay that mortgage for you, that somebody's going to pay your mortgage. And they
Mm.
look at me like, are you crazy? I don't have anybody.
Mm-hmm.
And I'll give them my card. I say, I will. I'll pay that mortgage for you.
Mm-hmm.
And it could be just a matter of it's $800. You know, $800 for a 35-year-old may cost you $27 a month.
Mm-hmm.
And you think, wow, I could have just had paid that small premium and been able to not worry about where my house payment is coming from.
Mm-hmm.
So
Mm-hmm.
that triangle protection, that gives you, that's another way that we keep you in your house,
Mm-hmm.
with disability insurance. So take a look at what you have at work. A lot of people have no idea what they have at work, but that's a big part of the triangle, that
Mm-hmm.
you don't know what you have at work. So if you've got 50% at work, you think maybe I need a little bit more. And by taking that survey about your likelihood of becoming disabled, that'll kind of give you an idea. I was just blown away about my percentages when I
Mm.
took it out. I was like, my goodness,
Mm-hmm.
because it does look at your lifestyle. You
Correct.
know, your age has something to do with it, but if you drink a little much too wine, or much wine, or you don't exercise enough, and if you've got tobacco in there, all of those things
Mm-hmm.
lead to an increased chance of a disability that
Mm-hmm.
could actually cause you to lose your home. So finally, that base of the triangle that we talked about with the triangle protection is that life insurance piece. And it's the base and foundation, is because, you know, if you don't have that right, your family, unexpected death, untimely death, and you don't have that in place, you could lose your home. Your
Mm-hmm.
children will have to move out of their home, where they go to their local school and have to go somewhere else. Um, I mean, I personally experienced this. My mom died when I was 12 years old. She was just
Mm.
35 years old. Who expects a 35-year-old woman with 3 children to pass away? But she had a chronic illness.
Mm.
But her death was unexpected. You know, I'm still in shock. Um,
Mm-hmm.
but she wasn't, she thought she was prepared, but
Right.
that life insurance she had at work was, it barely paid for a funeral.
Mm-hmm.
And the little policy we thought she had with another debit agent, he didn't come around and collect it anymore because he got another job. So that
Mm.
policy was gone. So life insurance is very important to me because I've seen people who had it and what their life looked like, and I've experienced what it looks like without it.
Correct.
And so I tell my story, to a lot of young women who think they have enough at work and they think they have enough. Most people don't have enough. 50% of the people don't have enough life insurance. They may have some. That's what everybody says. I have it at work. I have it at work, Jackie. And then the company decides, they're going to leave the area. Who just left here recently? They're going to leave. And hey, you're not going with them. So in that case, now you're 55 and you got a
Mm-hmm.
little blood pressure issue, you got a
Mm.
little weight issue, and your diabetes is knocking at the door because you got a family
Mm-hmm.
history. Now you need life insurance if you qualify.
Plus, we got a shorter time frame to pay
Absolutely.
the insurance company, so that premium is through
That
the roof.
premium is through the roof if you can get it, if you can qualify.
Correct.
So I
Right.
see that a lot. I say, you're just a little, short for your size, for your pounds.
Mm-hmm. Mm-hmm.
It could be simple thing as weight. It'll rate you.
Yes.
So
Absolutely.
you will never buy it as cheaply as you can today, because tomorrow you're going to be older. The next year you're going to be older. So you want to look at your life insurance plan. And Marcus, I can't say enough about life insurance, but a lot of people don't want to talk about it because it's not sexy. It's, we're talking about your own mortality and death.
Correct.
It's all around us. You know, I tell people, I guarantee you, this is the only policy I can guarantee you that your family will use. I
Mm-hmm.
guarantee you they will use this policy. Your house may
Mm-hmm.
never burn down. You may never have a car accident. You may never be sick and hurt and out of work, but I can guarantee you, you are going to die.
Mm-hmm.
Now, people buy life insurance because they love somebody or they owe somebody. So you have your term. I go with term insurance. I feel nothing is wrong with term insurance. It's for a short term, or it could be 30 years. That's not too short. If I can get a 30-year term locked in at a low rate, who cares? When someone passes away and you show up at the funeral, they don't ask, well, was it term, a whole life, or was it a universal life? What kind of policy was it? All I, what they care about is that you showed up with a check. And whatever policy you choose, it should be something that you can afford, that's going to be in place when you need it. And I think what
Correct.
happens with term, because sometimes you're not building the cash value and it's so inexpensive, they think, oh, well, I don't need this, they're more
All right.
likely to drop it.
But that's where you and I help them with the
Yes.
conversation, because like I said, you can take the term, and again, what Jackie's enunciating here is that we're talking about a person who works, they have an income, and we have to replace that income. Now, we're not talking about replacing it for 2 or 3 months. That person is no longer here.
Mm-hmm.
So if they're 35 and you want to maintain the same standard of living until you're 65, that's what we're talking about replacing with that
Mm-hmm.
term. So ideally, in a perfect world, and I think where we got missing, you mentioned earlier, our parents grew up working for one employer.
Mm-hmm.
So they worked, they
Mm-hmm.
retired. Now we don't have income to replace. So they were kind of okay,
Mm-hmm.
and then they retired and they probably had a pension and then Social
That's
Security and they
right.
were okay. Well, it doesn't work like that anymore. People hop jobs all the
Oh my God.
time. And so it's a different dynamic. And
Mm-hmm.
so now think about, especially around here, we do have a lot of households where only one person works
Mm-hmm.
and the other person stay at home person.
Oh.
Now if that breadwinner goes away, we need I just did one for a couple who, they only spend, when they're talking about their taxes and everything, they only spend $85,000 a year. I need a $2 million policy to cover if something happened to him, to get her through where she wouldn't have to do anything.
Mm-hmm.
And so then there we go. Okay. And then
Mm-hmm.
you and I start to go, okay, now how do we get there? Do we
Mm-hmm.
do 1.7 in term and a half
Mm-hmm.
million in
Mm-hmm.
permanent? And so there are all sorts of ways to bundle these.
Combination.
We're bundling again. Here we go. We're
Mm-hmm.
bundling again. Um, and like you said, I think didn't get you were getting down the road where term is rented
Mm-hmm.
and permanent is like a mortgage, and you bought
It's
the
like a
insurance.
mortgage. It's like a
That's right.
mortgage. It builds that cash value that you can
Mm-hmm.
use as an emergency fund. You can save it up and use part of it for college. It's not going to pay. Well, it depends on what you get. It's not going to. It's
Yeah.
not designed for that. It's the death benefit. That's the main thing. But the living benefits of life insurance. Oh my gosh. 35 years with State Farm. I bought life insurance 35 years ago. And
Mm-hmm.
there's all kinds of plans you can buy that are whole life that you can pay for 10 years, 15 years, 20 years, and then it's done. Your life insurance
Yeah.
is
You can.
paid for while you
Yeah.
got your high income earning years. If you can
Mm-hmm.
do it then and go ahead and
Right.
put it behind you, Marcus, I just paid off a 15 pay whole life that, I'm celebrating,
Yeah.
it,
I don't think people realize that. So you can come
mm-hmm,
to Jackie and say, hey, I want this $1 million policy, but
mm-hmm,
I she can either, when are you going to retire? We can make it
mm-hmm,
end at that date. No, I want to do it in 15 years. We can do it at that date.
Mm-hmm. Mm-hmm.
Because the idea is we're trying to get you to retirement too, and then reduce some of your bills. So
Absolutely.
we don't want you to have ideally in a perfect world, we don't want you to have a life insurance payment in
Mm-hmm.
retirement.
Mm-hmm.
So again, a lot of people just don't realize that, we have the ability to design that.
Design
Um,
it.
the flexibility, I know you were going to get to universal life and that flexible
Yeah,
premium, which we use for business owners a lot.
absolutely.
Because in regular people, because we don't know when we're going to lose a job and need to drop down to the, insurance only premium to keep it
Mm-hmm.
alive and then
That's
go
right.
back and put it in. So that life insurance is it's a unique tool, and we're learning how to
Unique.
use it a lot better.
Mm-hmm.
It has some retirement benefits.
Oh,
It's
it
just
does.
it's not a long-term care policy, but it has some stuff that can help
Mm-hmm.
in those situations. So,
Absolutely.
we can't
Absolutely.
sell it that way because that's not what it is, but
Mm-hmm.
we have to talk about it. And again, it's design and taking, again, you all give us your budget and we identify the
Absolutely.
gaps, and what do we have left over? We're trying to fill those holes.
That's right.
Um,
It's the budget. If you need, because once you do that financial needs analysis and find out exactly how much
mhm,
coverage you need to
mhm,
pay off your mortgage and your kids'
mhm,
education and your debts and those type, your final expenses and burial, you
mhm.
know, that may be, 1.5 million.
Right, yeah.
But you have a budget of $250 for your life insurance.
Okay.
So how do I design a plan that's
Mhm.
going to get you there? And it may not be in one setting, but we have to
Mhm.
get started. We
Right.
have to
We got
go
to get
ahead
on the
and get
train.
started. I want to wait. I'll wait. People always, call me back,
Yeah. Yeah.
and then when
Yeah.
they're calling me back, I know something's happened. And
Something's
it's
already
usually
happened.
a traumatic event that's happened in
Mhm.
their life. They lost a loved one, or they just been diagnosed with diabetes or cancer.
Mhm.
And you buy life insurance with good health. There's some
Mhm.
policies, we have some guaranteed issue policies that there's no medical questions, but they're small amounts. It's only from 10
Mhm.
to 15,000. Those
Mhm.
work for older
Mhm.
people who are already
Right.
chronically ill and can't get another policy. I celebrate them. So glad we have those.
Mhm.
But for younger families, starting out with a term policy for that mortgage, you got a 30-year mortgage, get a 30-year term. That's going
Right.
to pay that.
Right.
It's with you till you pay that mortgage off.
Mhm.
One of you pass away, the other spouse can pay the house off if they
Mhm.
want, but that
Mhm.
money goes to you. I mean, I suggest keep it in the bank and just pay the mortgage and let it earn interest for you. But that
It's a
money's
numbers
paid to
game.
you,
Yep.
not to the mortgage company.
Mhm.
So think that you're going to get a 30-year mortgage, get a 30-year term policy to protect it at least. And then you can
Mhm.
do combinations. Part of it be term and part of it's whole life where it's building that cash value.
Mhm.
Those cash values they're a great way for an emergency fund. Um, it's you buy term, you invest the rest. You heard that, Marcus.
Oh yeah. Well,
And
like you said, and we got to get better at, and we are,
mm-hmm,
we are getting better and bringing this information down to our children.
mm-hmm,
Um, but I'm starting to again run across where I've run into some younger couples, early 30s, 31, where the parents had the foresight to get the kid
mm-hmm,
a permanent policy when they were
mm-hmm.
6, 7, or 8 years old,
Right. Or when they're born.
or when they're born. Right, exactly.
Mm-hmm,
And then and it's okay if we didn't do that, but hey, we need to tell our kid just right out of college, hey, retirement plan, 401k, and your insurance policy. We need to get
mm-hmm.
that today.
I
That's
know.
first. Then we can go buy a car.
Financial literacy. I mean,
Right.
I
So
say enough about it.
and that's really the crux of why I'm doing these every other Tuesday and having you guys on for us to
Mm-hmm,
have these discussions, because when I used to teach over at Central, I told the students there it was I could see the progression where my parents got their first house at 42, my wife and I got ours at 27. Then
mm-hmm,
I'm teaching at Central, and I had a kid who had a rental property at 18.
mm-hmm.
So the progression
Mhm.
is there, but we just haven't had the resources to teach. And so it's getting better, and these discussions are really helpful.
Think so.
Again, we kind of just touched on the top of life insurance. There's so many facets to it, how we
It
use it,
is.
disability.
And
I mean, all of the products, there's so many facets to them. That's why we have to talk. Like
right.
I'll call Jackie, like, Jackie, did you see you could do this with a this policy now?
Mhm.
And vice versa.
Mhm.
Because it's just so much going on and so much innovation, even in the financial world.
It really is. And Marcus, what you do with these type platforms, um, just providing a place to talk about it and just to um, bring it to people in a real down to earth way, because it's not about, all of the charts and graphs
No,
and
no.
all of those things. A lot of times I'm on a piece of scratch paper and I'm talking about, I want to know what you want. I need to know about you, because I can't advise if I don't know what you do, who you love, what you enjoy doing for recreation. You could be mountain climbing, and I need to know that, because
Right,
that
exactly.
risk factor is different. So I
Mm-hmm.
need to be able to bring that to you. Um, Teenage drivers, I can't stress enough for parents with teenage drivers to um, increase their liability limits, really take the time on educating them on their driving, and be an example to them.
Mm-hmm.
If they see you on your phone and you're texting and driving and you're doing all of these type things, they're going to do the same thing. And I
Mm-hmm.
say that because the amount of accidents on the road, and I mean, recently there was a death of someone in my agency, two young women. Um, they went up the wrong way on an exit ramp. I mean, just something, and the mom just couldn't believe it. And what kind of limits does she have? Minimal limits. We
Mm-hmm.
talked about it, but she never thought it would happen to her.
Mm-hmm.
And so things that just to put these things out there. And I share that story about my mom because um, I really care about these
Right. Yeah.
children, people who don't have life insurance, because
Mm-hmm.
it makes a difference. It makes their life harder. And we could
Mm-hmm.
have paid 25, 30, $50 a month to have something in place, and not
Mm-hmm.
blaming a parent for not doing
No.
it, but when we know better, we do better.
Right. Yeah.
So
Yeah. Yeah.
that generational wealth that's passed from one generation to another, I'd like to see that, that's
Co-
commonplace for
Come to
us.
fruition. Right. Yeah. Come to
Yes,
fruition. Yeah.
and so
Yeah.
that's important. I think it's important to have these discussions about auto insurance, homeowners, because nobody reads their policy. It's not interesting to anybody,
No, no, it's not.
but it's use your professional to help you make it real for you, because you're not going to read the policy. But if you
Right.
talk to me, I'm going to make a recommendation, and we'll go from there. Just communicate, and
Mm-hmm.
don't just get it and stick it in a drawer and think that you're covered, because a lot of times you're not.
Mm-hmm. 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 Awesome. 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 Well, again, I gotta, kudos to Jackie for coming on here and
Mhm.
sharing this information with us.
Mhm.
I've got her information up here on the screen. You all please reach out to her, her office, great staff. I've interacted with them many times, myself. Um, and we will have her back, as well. So we kind of, Jackie, we've been kind of a running joke on the platform so far, and I think my CPA started it off first, James Hayward, who was on, and James said, "Oh, we got to start with 100 level classes." I said, "Yeah, we're just starting with the 100
100
level college classes.
days.
We're still freshmen, and
Mhm.
and towards the end of the year, we're gonna get to our junior year and
Absolutely.
ramp it up a little bit. So I'm gonna
Absolutely.
love to have you back on where we can really dig down into those life insurance policies.
Oh, absolutely.
I
I
want to
love
dig
it.
down into those, and we can bring up some real life examples, how they work, the things of that nature, show
Hmm.
cost and all that stuff, and just a different way. So really looking forward to having you back on,
Okay.
and us doing that.
Let's do that. I'm glad we did it and got the conversation started, and I look forward to the next one. And thanks for what you do.
Oh yeah, absolutely. Anything else you want to add before we go today?
No, I just appreciate the opportunity and to talk about a business that I love so much that people think that we're one level above a used car salesman. And I say, that's not true.
Well,
It's not
unfortunately, there are some who
who
do not do what we
operated
do.
that way, but it's,
Right. I
um,
tell clients all the time, you can do our job really bad and make a
yeah,
whole lot of money,
yes,
or you can do it
yes,
right and you'll probably won't gain any weight,
absolutely.
because you'll do it right and you'll have the client
Hmm.
spend what they're supposed to spend versus
Absolutely,
worrying about your own commissions. So,
absolutely.
making sure you're getting with people who have your best at heart. And that's why it's good to have the circle, the triangle of even
Hmm.
professionals, because we're kind of serve as a checks and balances on one another as well, to say, well, yeah, you could do it that way, but let's look at this and let's talk with them about that.
Absolutely, because
So,
I do investments and you do that type of work. And,
right,
I refer people to you because it's like, that's not my expertise,
right.
taxes and all those things, but I know a guy.
Right.
Um,
And I have a life insurance license. I have a health insurance license,
hmm.
but I don't see it every day. And that's why I'm
Hmm.
like, can I do it? Yeah. Will I put you
Hmm.
necessarily in the best thing? Might not. So
Hmm.
probably you go talk to Jackie.
Hmm.
and
Absolutely.
and it's funny, my cousin and I, years ago, we had a conversation with a client. I mean, no, with a person we were trying to bring into our group as a professional. And the first question he asked us was, what was our referral arrangement, meaning compensation?
Hmm.
We're like, no, we don't have those. It's, if
Hmm.
I send somebody to Jackie, I just need her to do a good job.
Hmm.
I don't need
Absolutely.
any money from Jackie. I need, she's there to take care of my client and vice versa.
Right.
So, when
Absolutely.
we have a group that kind of starts talking about money first, it doesn't,
Yeah.
my peoples get up and it's like, no,
Yeah.
you don't fit our
Yeah.
group.
That's not my thing.
You won't
No.
fit our group. No, our
No.
group's trying to help first. So
Yeah.
again, thank you, thank you, thank you.
Thank
This
you,
has been
Marcus.
wonderful.
Thank you.
All right, everyone. Again, I'm on in a couple weeks. The live stream schedule is on the LinkedIn page for you all to follow it. Thank you again for Jackie. Again, her information is up on the screen. Call me if you don't
Please.
have it. I can get you to
Mhm.
her. Been working with her for years. And again, Jackie, just thank you for your time today.
Thank you,
And
Marcus. Thank
we
you. I appreciate it. And we'll talk soon. It's
we'll
tax
do it
time.
again. It's tax time. Oh yeah, I'll be talking to you. All right.
No. All
Goodbye.
right.
Goodbye, everyone.
Bye-bye.
Bye bye.